1% deposit mortgages. Is this really going to happen? It is Sunday, the 21st of January, 2024 at time of recording. And there's rumors that Rishi Sunak is actually going to announce 1% deposit mortgages for first-time buyers. What you're seeing here is an article from The Independent confirming the rumors on the first 1% deposit mortgage scheme, right? Now, a lot of property experts are warning against the 1% deposits because they think it's going to overinflate house prices within the market. And let me explain this further to you. So what they mean by inflating house prices in the market is, if this scheme actually becomes a reality, what's going to happen is loads of first-time buyers are going to try get onto the property ladder with just 1% deposit. Now, what will that mean for house prices? So imagine this, there's just a rush. All of you are going to buy this property. What will happen is loads of you are going to be going for the same property. What's that going to do? Drive the property values higher because you all want that property. So it's going to flip reverse, because right now, as of the 21st of January 2024, it is a buyer's market. But what's going to happen is it's going to turn the market into a seller's market, because they'll be in control of the house prices. We're pretty much, if this happened, going to go back when the stamp duty exemption came into play, where everyone's just going to be paying over the odds for a property. Now, even though 1% deposit mortgages sound great, think about this affordability. You actually need to be able to afford to get the mortgage loan for that property. So let's use a scenario here where the property value is £300,000. You've got 1% deposit, which is £3,000. So you need a loan of £297,000. Your income, your expenditure, your credit commitments, everything needs to be able to prove that you can afford a loan of £297,000. Now, the higher the property value, the more your 99% loan from the bank is going to be. So is your income really sufficient enough to get you to that higher loan that you need? Because what will happen is lenders will definitely stress this at a higher rate. So right now, currently, you need 5% deposit to get a mortgage within the market. Currently, when you've got a 5% deposit, lenders restrict the income multiples. If they do provide these 99% mortgages, the income multiples may even get restricted even more. Depending on the property value that you're looking at, depending on the loan amount that you require, you may not be able to get that 99% mortgage that you want. So this potentially could mean that prospective buyers, even though the scheme sounds great, if it does actually come into reality, is they won't be able to actually get a property of the value that they want. So they'll need to look at properties valued at the lower end, assuming that they'll be able to get the mortgage loan from the bank. Now, firstly, does that get you what you want? Secondly, if prices do inflate and it becomes a seller's market and the house prices go up, are you actually able to afford that house price that you want? Who knows? The rate, 99% loan to value, so with a 1% deposit, will most likely be higher, because the higher the loan to value, the higher the rates are. So typically right now within the market, you need a minimum 5% deposit to buy a property within the UK. Now, at 5% deposit, the rates are higher than 10% deposit. So imagine if you're only putting down 1% deposit and you require a loan of 99%. The rates will be higher because you're putting less money down for the property. It's more risk to the mortgage lender. Now, what I'm going to show you next is an actual mortgage sourcing system as of January 21st, 2024, which shows you the difference between the loan to values and the rates. So you get an idea of what I'm talking about here. So this is a mortgage broking system which has online real-time products available from mortgage lenders. So let's use the example again of £300,000 property purchase price. Minimum deposit you need in the UK right now is 5%. So your deposit will be £28,500. Now let's assume it's from savings, and let's just say a 30-year mortgage term. And we'll just do a 2-year fix just for mortgage illustrative purposes. This is going to show you the mortgage products as of today for 5%. You can see here, look, 4.9% to 5.5%, and it just goes higher and higher. Now, this is dependent on which mortgage lender you fit affordability wise. So all these lenders that you're seeing here, just because, for example, this rate is 4.9%, doesn't mean you're actually eligible for it, because you need that lender to use your income the way you need it to be used to get the mortgage loan that you require. So now we're using the same example again, but with a 10% deposit. So if you saw previously, best rate was 4.9%. Now what we're going to do is see with a 10% deposit, does that make a difference on the mortgage products available? So you can see here, look, it's gone from 4.9% to like 4.69 or 4.87. So it does make a difference on the loan to value on the mortgage products available, which could in turn change your monthly payment, because your monthly payments depend on the rates available. Is that lenders will change the product rates available depending on the loan to value. So if this 99% mortgage scheme comes out where you put down 1% deposit, the likelihood is the rates are going to be higher because you're putting a low deposit. Another thing to consider is negative equity. So if you pay a higher price for the property, assuming that the house prices increase if they announce this, and in the future you need to move, what happens if house prices come down in the future and you've overpaid for that property? So what I mean by negative equity is your mortgage loan amount is actually higher than your property value. So actually you have no equity within that property. What happens then? Because that is not a good thing or a good place to be in. Because if you want to move and you're reliant on the sale of your current home, but you've got no equity in there and you need the deposit from your current place, you won't be able to move. So you're stuck. And that's not what you want. You need to consider as well, is this your long-term property? So for many first-time buyers, for example, if you're single, no dependents, this is just your first step onto the property ladder. You're most likely going to buy a bigger property in the future when your circumstances change. You know, if you get married, if you have kids, you might need the bigger space, because many first-time buyers, for example, purchase flats and not houses. Now, if that is you, then you need to consider all of these things if this is actually announced. Where it could work, a family, and you know that the property that you want, you can get, and you're never going to move. So this is your forever house, you've got your kids, you're never going to move. Then it's something to worth consider if this does come out. But just remember, there are always negatives to the positives as well, which we've mentioned in this video. So just think twice before you start thinking of applying for these type of mortgages if they do come available. If you've got any questions on this video, be sure to drop them in the comments below. But check out my next video, which will show how the 1% deposit mortgage will work if it is officially announced.